All right, it's going to be a short uh, webinar today on business tax deductions of gifts to employees and customers. Again, I mentioned that this is prepared by Ying, our CEO at Community CPA. A quick few words about our firm. CommunityCPA.com. So we are a full suite CPA service company. So we provide services in accounting, audit, tax, payroll, and business advisory, as well as legal. We do have attorneys on our staff. Okay, and so we have a website. You can also find us on YouTube channel, Community CPA YouTube channel, where we have where we collected the past webinars that we have given. So including today's, for example, and this will be posted there probably in a few days. Okay, and also you can reach us at our general phone number 515-288-3188. Okay, so we are a firm specializing in providing services to all in many languages. Okay, so collectively our staff speak 9 different languages. So you probably don't find that in too many other places. All right, so quick the regular Tuesday webinar presenter, Ying Sa, that's the CEO and managing partner of our firm, and she has published her first book a couple years ago on how to start up a business. So the title of her book is Appointment Within at 8 a.m. So 8 a.m. you start the day, okay, or you start up a business. And then she's going to soon publish her second book, that's Appointment Within at 10 a.m. So that's how to develop a business. So in 10 a.m. of the day, you are in the middle of the day, you are developing your business. Okay, so that's where the 8 a.m. or 10 a.m. Signifies. And also, we just for those of you who are just attending this webinar for general information, of course, that does not form a client relationship with us, so we are not responsible for any consequences if you solely rely on just attending the webinar. In order for us to better or best serve you, so we do encourage everyone to retain our service. And so you can reach us at the phone number and website I previously provided. So I'll repeat that at a later time. And as I mentioned earlier, so we are going to talk about how to do or what's allowed to deduct as business expenses if you're giving gifts to other people. And so, of course, we are focusing on business clients. So this webinar is geared toward our business clients. So if you're running a business and at this is the Christmas time or near year end, so you want to appreciate your employees as well as your customers, and you want to give them some small gifts as a token appreciation. So then what's the tax deductibility on such expenses? So we'll divide that the gift into 2 categories. So that's gifts to employees and gifts to customers. The rules are different, and maybe even quite a bit different between the expense on gifts to employees and the on gifts to customers. Let's first talk about the gifts to employees. So in general, if you give any cash gifts to your employees, these are treated, or these should be treated as a taxable compensation. So, and it's basically they just, they need to be added into their paycheck. So when you calculate FICA and withholdings or tax withholdings, FICA stands for basically Social Security tax and Medicare tax. So that combined, that's a FICA, and also because you are adding such cash gifts to their paycheck, so then they need to you need to calculate the proper withholding as a result of that. So, in other words, if you are thinking of rewarding your employees a big red pocket, what the Chinese people call, the year-end red pocket. It's basically just a pocket of cash. Okay, so if you're thinking about giving your employee a red pocket of, let's say, $1,000, so then that pretty much the entire thing should be treated as a cash compensation. Okay, so that's no different from you're giving your employee a bonus. When you know that the bonus are typically just added to the paycheck, so they are treated as part of their compensation, just additional compensation, and so are the cash gifts that you're giving them, and cash gifts. And that the cash, of course, here it also includes things that are near cash, such as a gift certificate, so they can redeem for cash value. Okay, so and then if you're giving them a non-cash gift, such as buy some calendar, book, or whatever, small gift you buy, and that the limit can be raised to, there is a limit of $75. So you can't just buy them an expensive gift, and so that's not cash. So then you just give them a personal property, and that's, let's say, $1,000 personal property. You want to give that to your employees, so that's not permissible. Okay, so anything exceed the $75 are no longer deductible as a business deduction. Okay. All right, and there's an exception to the $75 or the cash compensation. Well, not really exception. So really, it's an exception to the $75 rule. Okay, so if you're giving your employee an award, non-cash award. By the way, I should go back here. Okay, so the gift actually includes award. If you award your employees cash, like say, instead of giving everybody $1,000, you want to award a few big producers of your company, say $1,000 non-cash gift. So that may, that's still going to be counted as a cash compensation. Okay, so that will be subject to FICA and withholding and things like that. Okay, and so if you're giving a special kind of a reward, that just limited few types of a reward or award, and you have a qualified plan. Okay, so the qualified plan basically just have some written rules. Okay, if you have a qualified plan award, so then you can give a personal property gift. So again, it's a non-cash gift. So it has to be a property, some of something. Okay, a personal property gift award for those types of services, for those types of awards. Okay, length of service. And actually with a minimum of 5 years of service, okay, and or safety and achievement, or they give you a suggestions, voluntarily they give you suggestions, and so all of these things, if you have a qualified plan, or basically a written plan, giving out those awards on a selective basis. Okay, so then you can award up to $1,000 award things. Okay, cannot be cash. Award things of up to $1,600 limit per employee per year. Okay, whichever employee that's getting it cannot exceed $16,000 in value, because these are things, not cash. And also, there's also another additional requirement. So let's say if you're giving out, let's say 20 different awards in a year, and so the average cost of those 20 different items cannot exceed the $400. So subject to those two limits, you can give some non-cash rewards at a much higher value than just the regular non-cash gifts to employees. All right, so that's about gifts to employees. And so now, what about gifts to customers? Okay, so IRS set a very low limit on how much you can give to each customer. Okay, if you're giving a customer either directly or indirectly, So then there is a $25 limit per person per year. Okay, so you cannot give so basically you obviously you can't give them anything more than $25, but then anything over $25 limit cannot be deducted as your business expense. So you just have to, so it's almost like giving out a dividend, right? So you don't, so that's after you have paid all the taxes, and then your company can do the value and do away with the money in whatever you wanted after you have paid taxes. All right, so there is a $25 limit per customer per year, and so that includes both direct and indirect gifts. So if you're giving to a family member of a customer, so that would be counted as that's an indirect gift. Okay, so but that would be counted against the quota under the customer, him or herself. Okay, so whether you give it directly or indirectly, they are counted together. And so that they are counted together, then they are subject to the $25 limit. Okay, so you might be wondering, so are we going to give you any ideas, so that you can get around that limit? Okay, so our general recommendation is don't be too creative, because you're not giving out tens of thousands of gifts to your customers and try to disguise as a business expenses. Obviously, you're not going to try to do that. Okay, so then, and whatever gift money you're giving out are typically small, so it's not worth the trouble. And in the tax audit, if you give out $500 or $200 gift and over the limits, but then if you get an audit, so then they're small, $200, $500, they're still small, but that could land you in a very uncomfortable position in the tax audit. So just don't be too creative. But of course, fortunately, there are some exceptions, so you can try to take advantage of. So the first thing is that if you have like a couple that are your customers, so that both husband and wife are your customers, and you can give them a combined gift of $50. Because $25 can hardly buy anything nowadays. So with the inflation going up this year in particular, so but maybe you combine that to $50, so you can maybe you can give something that may be a little more meaningful than the $25 each. Okay, so you can do a $50 combined gift to the husband and wife, to the couple. But remember, so they both need to be your customers, because if one is your customer, the other one is not, and then you are subject to the remember the direct and indirect gift limit of $25. Okay, so if only one of them is your customer, and you're giving out the $50, so then let's say giving husband 50 and wife 50, but then the wife's indirect 50 is also on the husband, so then you're giving one customer $50, so that exceeded the limit. Okay, but anyway, so if they happen to be both happen to be your customers, then you can give them a combined gift of $50. Also, the incidental costs for gifting are excluded from the $25 limit. Okay, incidental costs include like a gift wrapping, or if you have a small jewelry, like some cheap jewelry, and you want to engrave your phone number or whatever you want to put on. Okay, doing an engraving, or if you're doing insured mailing, so the insurance as well as the mailing costs, these are also they don't count against the $25 limit. So if you're giving your clients some things that can also be regarded as entertainment expenses, such as a sports gift or movie theater gift, like a sports ticket or movie theater tickets, things like that. And you can actually do a 50% deduction as the reclassify. Instead of call it gift, and you call it entertainment expenses. and so then that's under the 50% deduction rule. But of course, if it's a $15 movie ticket, so then you're probably better off to use the $25 limit, okay? But if you have a $100 ticket of a special show or for some sort, so then the 50% would allow you to deduct $50, and so then you're probably better off to use the entertainment expense rule rather than the gift rule. All right, and also you can give your customers certain promotion and advertisement items. So obviously you cannot give out the expensive items, because that you would be suspect to be giving a big gift under the disguise of a promotion or advertising items. Okay, so just don't cross the line too far. Okay, but anyway, so there are some items that may be classified as promotion and advertisement items. So then you can, basically, then those would be 100% deductible if it's a promotion advertising items for your business. All right. And the last thing I want to mention is that if you're gifting to another business, so then for something, giving them something for use in their business, so then that will not be subject to the $25 limit. So that $25 limit is only for your business to give an individual customer a gift. So if you're giving another business a gift for their use in the business, so these are the languages in the code. Okay, so. And so then and that's not subject to the $25 limit. But what exactly is that? So you have to be a little careful. So and then again, so you don't want to cross the line too far. Okay, let's say for example, the two businesses start trading their products, for instance. Okay, so then that would probably have gone too far in that. Okay. But anyway, so these are the things I want that's in the rules. Okay, so these are all permissible by the rules. And the last thing I want to mention, I guess for the last item, I want to mention that the example that's given in the code is actually one company is giving another company a technical manuals for their use in the business. Okay, so then that will be permissible. Okay, so and that example suggests so you have to be use that in a very limited situation. And also, interesting enough, in the code, it also mentioned the example of giving a bunch of tickets, a set of tickets to a company. So in that case, let's say if you give them a set of 10 tickets to a company, the sports ticket or movie tickets to a company, and then let's say that company has 100 employees, and you don't specify who these should be given to. Okay, so then basically you're not indirectly giving to specific individuals. Okay, so that's actually what would fall under this category. So that's a gift from your business to another business, and so then presumably that entire cost for you to purchase those tickets would be deductible on your book. All right, so that's all of the ideas I want to talk about today, and also do remember that. Just like all the other business expenses, so if you had incurred a gift expense, you do need to keep the record. So in the case of a gift expense, so you need to have a short description of the gift and the cost of the gift and date the gift was made, and the business purpose. I guess if you're the appreciation of the customer, and so basically something like that probably would be good enough. Okay, and also the business relationship, you just need to write down, yeah, so this is our client, or another business that has connection with us, or things like that. So you just document or just write down what the business relation is, and then you do need to keep those records, like all the other expense records, for a number of years, so 3 years minimum, so but could be as long as 7 years, and we typically recommend people to keep the expense record for 7 years. All right, so that ends our brief webinar today on business deduction of the gifted expenses. Okay, so let me recap our firm address and all that. Okay, so our website, communitycpa.com. Our phone number, 515-288-3188. We're open from 8:30 through 5:30 p.m. Monday through Saturday, 6 days a week. Okay, and you can email to us at catherine@communitycpa.com or any other emails you can find on our website, so you can email directly to any of our staff, so we'll be happy to serve you. Thank you for listening and watching today's webinar. Bye-bye.